Good day. I am Jella Rose de la Cruz from BSBA Marketing Management 2A. I am going to make a video tutorial about the basic accounting equation, the T account, the double entry system, the normal balances of accounts, and the recording transaction using T accounts. So our first tutorial is about how we compute the basic accounting equation. The basic accounting equation is asset is equal to liabilities plus owner's equity, where liabilities are all current and long-term debts and obligations. Owner's equity is the sum of assets that are available to shareholders after all liabilities are paid. To calculate the accounting equation of asset is equal to liabilities plus owner's equity, the value may be taken from the balance sheet or given information. The sum of all assets will be equal to the sum of all liabilities and all owner's equity. The basic accounting equation may also be written as liabilities is equal to asset minus owner's equity, or owner's equity is equal to asset minus liabilities, depending on which information is available to use. For example, a sole proprietorship business owes 15,000 pesos and you, the owner, personally invested 170,000 pesos of your own cash into the business. The asset owned by the business will then be calculated as. So here we simply gonna add the liabilities and owner's equity. So the asset is 185,000. Next is T account. T account is a visual presentation of accounting journal entries that are recorded by the company in its general ledger account in such a way that it resembles the shape of the alphabetical T and depicts credit balances graphically on the right side of the account and debit balances on the left side of the account. Always remember that the debits on the left and credits on the right. How do you do an T account in accounting? First, a large letter T is drawn on a page. The title of the account is then entered just above the horizontal line, while underneath debits are listed on the left and credits are recorded on the right, separated by the vertical line of the letter T. So here we have example of how T accounts are used. A company received a 50,000 pesos invoice from its landlord for the July rent. The T account shows that there will be a debit of 50,000 pesos to the rent expense account, as well as corresponding 50,000 pesos credit to the accounts payable. Next is double entry system. Double entry have two opposite and corresponding entries that are known as credit and debit. The right side is the credit and the left side is debit, and the other that includes credit. Double entry meaning also refers to the transactions that are effective in two accounts, one that includes debit and the other. For example, if a company takes out a 25,000 loan, the cash or the asset account is debited to 25,000 and the outstanding debt accounts payable is credited to 25,000. Next is normal balances of accounts. The normal balance of an account is the side of the account that is positive or increasing. To understand the normal balances, it's important to understand the T account model. The normal balance for asset and expense account is the debit side, while for income, equity, and liability accounts, it is the credit side. And credits subtractions to the account or negatives on the other side of the T. T account provides a visual overview of a single account using a T shape, with debits addition to the account or positives on one side of the T. You purchase 65,000 worth of new computers. Technically, you've increased your business's assets by 65,000 pesos, and you'd note in this in your business's asset account. However, you purchased the computers on credit, so you'd also note the cost of computers in your notes payable account. Recording transaction using T account. Business transaction using for the month of April 2013. Number 1, April 1, the JW Corp received 200,000 in exchange for 40,000 shares of common stock. On April 1, the transaction increased and decreased the asset. The cash account is increased, so the 200,000 is debited, and the common stock is decreased, so it's credited. Number 2, on April 1, the JW Corp borrowed 150,000 from US Bank on a note due in 5 years with 8% interest paid monthly. On April 1, the transaction increased the asset and liabilities. The cash account increased, so the 150,000 pesos is debited, and the long-term notes payable is credited because JW Corp borrowed on bank due in 5 years with 8% interest. Number 3, on April 2, the JW Corp purchased a building for 360,000, 25-year life, with 60,000 cash down payment and signed a note with AB Bank for the remainder due in 10 years with interest due monthly at a 6% rate. On April 2, the transaction increased the asset and liabilities and the other account of asset decreased. JW Corp purchased building debited to 360,000, and since JW Corp down payment 60,000, it is debit, and due in 10 years, it is long-term notes payable, and it's debited to 300,000. Number 4, on April 2, the JW Corp purchased a delivery truck, 5-year and 200,000 mile life, for 90,000 on a note due with the Ford Corp with interest accrued monthly at a 12% rate. The total interest and principal are due in 6 months. On April 2, the transaction increased the asset and liabilities. The JW Corp purchased delivery truck on a note, so the delivery truck debited to 90,000, and since on a note with Ford Corp with interest accrued monthly at 12% rate, it is short-term notes payable. The 90,000 is credited. On April 5, JW Corp received 105,000 from the Target Corp for bikes we will deliver later. On April 5, the transaction increased the asset and liabilities. The cash increased because JW Corp received 105,000, so its debit, and unearned revenue is increased, so it's credit. Number 6, on April 6, JW Corp purchased 1,500 bikes at 88 each on account from a specialized corp. FYI, Corp uses a perpetual PEPO inventory system. On April 6, the transaction increased the asset because the JW Corp purchased 1,500 bikes at 88 each, which is the inventory 132,000 debit, and the liabilities increase because it is on account, which is accounts payable 132,000 credit. Number 7, on April 7, JW Corp purchased 2,000 bikes at 96 each on account from a specialized corp. On April 7, the transaction increased the asset, which is inventory, 190,000. JW Corp purchased 2,000 bikes at 96 each, so it's debit. And liabilities increase because it also on account, which is accounts payable, 190,000 credit. Number 8, on April 10, JW Corp paid this month rent expense for 18,000. On April 10, the transaction increased the expense, which is rent expense, 18,000 credit, and the asset decreased because JW Corp paid rent expense, so the cash is credited to 18,000. Number 9, on April 15, JW Corp received this month's phone bill from ATT for 7,000 to be paid later. On April 15, the transaction increased expense and liabilities. The phone expense debited to 7,000 because JW Corp received phone expense, and the accounts payable debited to 7,000 because it's not paid. Number 10, on April 18, JW Corp received this month's utility bill from PGE for 8,000 pesos to be paid later. On April 18, the transaction increased expense and accounts payable. JW Corp received utility bill 8,000, so the utility expense debited to 8,000, and because it is not already paid, it is accounts payable credited to 8,000. That's all. Thank you for watching.